All right, guys, so I finally ripped the Band-Aid off and I sold out of AT&T and Verizon, which I'm not gonna lie, locking in those losses definitely stung a little bit, but overall I feel good about the move. I think it's an improvement in the portfolio from a long-term perspective. Plus, it left me with a few $1,000s to reinvest back into some of my other holdings, which I've actually already done. I didn't waste any time putting that money back to work, and in this video, I'm gonna show you exactly what I bought. It was quite the shopping spree, but first I wanna show you what went down with AT&T and Verizon. All right, guys, so here we are over on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. I hope you check it out. But what we're looking at here is the sold positions page on the spreadsheet, and this is exactly what it sounds like. This is where I log all of the positions I've sold out of, and here we have both AT&T and Verizon, and going through each one by one, I sold out of all 101.5 shares of AT&T at an average cost of $21.60, and I sold when the share price was at $17.20. So that's quite a big loss there. And then with Verizon, I sold all 43.9 shares. My average cost was $51.40, and I sold when the share price was $40.49. So in both cases, I took quite a big loss. And to be more specific, in terms of share price, I was down 20.4% with AT&T and a little bit more with Verizon, down 21.25%. But thank goodness for dividends, guys, because it really made a big difference. And on a total return basis, which includes dividends in the calculation, I was down less than 3% with AT&T. So once again, quite a big difference. And with Verizon, it definitely helped as well. I was down 9.6%, so I was able to save about 12% just from dividends there. And although both AT&T and Verizon were not relatively large positions in my portfolio, upon selling out of them, I was left with quite a nice chunk of change. I had about $3,500 that I was able to reinvest into some other positions, and I ended up reinvesting into 5 different stocks, starting with this first one here. Yeah, believe it or not, guys, I actually picked up a few more shares of Chevron, which is the first time in a long time that I've done that, but I figured, it's down 8% in the last year, so I might as well pick up some shares, and what I did is I ended up buying 6 shares of Chevron when the share price was at $153.22, which if we take a look at my position here, leaves me with 19.25 shares of Chevron at an average cost of $112.13, which is still quite a bit below the current share price. But prior to this purchase, guys, my average cost with Chevron was quite a bit lower than it is now. Prior to buying these 6 shares, it was like about $97.50. So even just from, buying this small handful of shares, it really brought the average cost up. But even so, it's still all good, guys. I mean, just in terms of share price, I'm still up 38% with Chevron, so I still have a pretty nice margin of safety. And on a total return basis, I'm up closer to 48%. So in both departments, things are looking pretty good. And I'm actually pretty happy to buy more shares of Chevron. I mean, looking at the dividend stats, there's a lot of good stuff going on here. They got a nice and high 4.2% yield. Not as high as what I had with AT&T and Verizon, but still, this is a very respectable yield. And I am getting a higher dividend growth rate than I was getting with either of those two. 6.25%, much nicer. I'll definitely take that. So my goal when it came to reinvesting these funds was to not take too many steps backwards in terms of my projected annual dividend income, which I thought was going to be a difficult thing to do, seeing as AT&T and Verizon were 2 of my higher yielding stocks. But that's where this next purchase comes in, as well as most of the other ones we're talking about today. EPD is certainly one of the higher yielding stocks in my portfolio with a 7.63% yield, but along with that, they're also very consistent in growing this dividend and have been doing so for the last 25 years. With that said, the 5-year growth rate is a bit on the lower side, but that's to be expected considering how high the yield is. And as far as my purchase goes with this, guys, I ended up buying 12 shares of EPD at a $27.08 share price, which makes this one of the smaller purchases from my shopping spree here. 12 shares is a pretty decent amount, but it's not an expensive stock at all, so I really didn't put too much more money into EPD. And even though I do really like this company, I didn't want to buy too many shares of EPD because I knew I wanted to make a larger purchase elsewhere, which I'll show you momentarily. But first, taking a look at my EPD position, I am left with 112.83 shares at an average cost of $23.88, and with the current share price of $27.25, things are looking pretty good with EPD. I'm up 14% in terms of share price, but doing much better on a total return basis. I'm up 30.5%, and I'm pretty confident that over the long term, this number will just keep going up. So I will say, I think I added to this one a little bit on the expensive side. I ended up buying 17 shares of Main Street Capital Corporation at $44.78, which is close to the top of the company's 52-week range. And as we can see, Main has seen a huge surge of over 15% in the last year. So it's done really well, but it means that I did not buy these shares at the biggest discount, but still I think I'll survive. Looking at my position here, with these extra 17 shares, I'm now sitting at 56.25 shares of Main Street at an average cost of $40.66. And I think prior to the purchase, I think I was maybe at 38 or 39, somewhere in that range as far as the average cost goes. But anyway, I'm still up a bit. You know, the current share price is about $45, so I'm still seeing a 10.4% gain in terms of share price, and then with dividends included in the calculation, I'm up closer to 24%. So still, overall, things are looking really good with this position, and this is also one of the higher yielding stocks in my portfolio, with a yield coming in at 7.64%. All right, guys, so like I said a moment ago, I was saving a lot of my investment dollars for a larger purchase, and that was Realty Income. I ended up loading the boat on Realty Income. This was absolutely my biggest purchase out of all of them by far. I ended up buying 29 shares of Realty Income at $51.97, which I think is a great price. This is coming off the heels of a 10% drop just in the last month, and for me, it was a great opportunity to average down and lower my cost basis. And now, as you can see, I'm officially across the 100 share mark with Realty Income, which is why I bought exactly 29 shares. I wanted to get to that even 100, but the good thing is too, it ended up bringing my average cost down just a little bit. I think prior to buying the 29 shares, it was in the mid 56 range, so it dropped a couple bucks from that. And with the current share price of 52.33, I'm not seeing too crazy of a loss with Realty Income. In terms of share price, I'm down about 4%, but I am officially in the green on a total return basis. And another thing too, guys, with this purchase, which obviously was a hefty one, Realty Income is now the largest position in my portfolio. If we look at how my portfolio is diversified over here on GetQuinn, which, like my dividend portfolio tracking spreadsheet, you can start using GetQuinn for free. And once again, there is a link to it in the description of the video. I highly recommend you guys check this out, especially if you're looking for a portfolio tracking platform that offers a bit more functionality than your average spreadsheet. I think this is a really good option, and you know, it's hard to beat free, so you can check it out in the description of the video. But yeah, like I said, guys, across both of my accounts, my main taxable account and my Roth IRA, Realty Income is the largest position. I now have about $5,200 invested in Realty Income, making up 8.25% of the overall portfolio, which means in second place we have Johnson & Johnson at just under 8%. In third place we have SCHD, which over time, you know, undoubtedly will become the overall largest position. It's just going to take a little bit more time to get there, but I think in the next couple of months, SCHD will take the throne. But anyway, moving into the fourth spot here, we have Starbucks at just under 7% of the overall portfolio, and then in fifth place we have Procter & Gamble at about the same point as Starbucks there. And with that said, I think this is a pretty good time to hit the pause button on adding any more to Realty Income, and actually Johnson & Johnson as well, and I'm pretty stoked to have both of these in my top 5, don't get me wrong, but there are some other positions that I'd like to invest more into and build out, like this next one here. So this one was actually kind of a bonus purchase. I think after buying those other 4 stocks, I'd officially used up all the cash from the sale of AT&T and Verizon, but I still had some more money to put to work in my account, so I figured I might as well buy another share of Visa, and this was actually my second share purchase this week, which I picked up for just under $280. And looking at my position, this officially puts me at 10 shares of Visa. And right now my average cost is $268.63, and with the current share price about 10 bucks above that, I'm up just a little bit. I'm up 3.7%, both in terms of share price and total return. I haven't received any dividends yet, so that's why these are the same. And right now, Visa is the position I want to build out the most. I'm pretty determined to make this the largest individual stock in my portfolio, and to get there, I basically need to just double my position from here. So I need to buy at least another 10 shares of Visa, and I may even keep going from there, but we'll just have to see. But anyway, guys, those were all of the moves made in the portfolio, and then this is what the before and after looks like. So starting here with the number of positions, not counting the 2 ETFs in my Roth IRA, just my individual stock positions, I went from 21 down to 19, so a little bit of consolidation there, which feels good. And then as far as the projected annual income goes, this worked out exactly as I was hoping. I went from $2,539 down just a little bit to $2,526. So I only lost about 17 bucks in the process, really not a big deal at all. And then my dividend yield came down just a little bit as well, which was to be expected. It went from 4.09% down to 3.96%, so we're officially under 4%. And then as far as the dividend growth rate goes here, I did see a little bit of a boost. I went from 7.8% up to 7.9%. So a little bit of a jump there. And if I can get that to at least above 8%, and if I can maintain about that over the years, things will be looking pretty great. And overall, I think this was a really big improvement in the portfolio. And I think the companies I reinvested into are all pretty solid choices, unlike the 3 dividend stocks we're talking about in this next video right over here. These are the complete opposite. Okay, these stocks are trouble, and you would absolutely regret buying them. So click right over here to find out which ones they are, and I'll see you in the next one.